Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Philippine Stock Exchange Index down 20% over 10 years, making it the world's worst performing market. The Philippine economy likely cooled in the third quarter as soft government spending, typhoons, and corruption scandals weighed on growth momentum. And Philippine manufacturing activity rebounded in October despite a further drop in new orders and output. Let's take a look at how global financial markets performed overnight. U.S. stocks closed mixed with tech gains driven by new deals in artificial intelligence, even as investors remain cautious about the Federal Reserve's next move. The lack of fresh economic data due to the ongoing U.S. government shutdown has made the Fed's policy outlook less clear, following last week's expected interest rate cut.
I think we're seeing a mixed environment. We're seeing a resilient stock market with the S&P 500 futures rising. Berkshire Hathaway's gaining after reporting a strong Q3. And they're also announcing a record $381.7 billion in cash reserve. Amazon posted really strong earnings on Friday, and a bunch of other major AI companies like Palantir, AMD, and Supermicro are sharing profits this week, fueling a lot of investor optimism. The trade war with China seems to be easing following leadership talks, but this comes again against the backdrop of a prolonged 35-day U.S. government shutdown.
The Dow Jones Industrial Average lower by 0.5%, the S&P 500 up by 0.2%, and the Nasdaq higher by 0.5%. Over in Europe, markets also ended mixed. The UK's FTSE 100 down by 0.2%, Germany's DAX up by 0.7%, and France's CAC 40 lower by 0.1%. Here at home, investor confidence in the Philippine market is at its lowest in years, and for one Filipino lawyer, that loss of trust has come at a personal cost. A decade of disciplined savings turned sour for one Filipino lawyer who invested half of his monthly pay in Philippine stocks, only to see his gains wiped out. His story reflects the broader slump in the country's equities market, with the Philippine Stock Exchange Index down 20% over the past decade, making it the world's worst performing major market, according to Bloomberg data. By comparison, Asia-Pacific stocks climbed 72%, while Indonesia's market surged 82%. The local index has also fallen more than 11% this year, weighed down by weak turnover, few new listings, and a widening government corruption scandal. Industry leaders say investor interest has evaporated. Isidro Consonghi of DMCI was quoted as saying foreign investors don't pay attention to the Philippine stock market. The economy is weak and we can't do anything about it. The Philippine economy showed signs of losing momentum in the third quarter, with economists estimating growth at around 5.3%, slightly below the 5.5% posted in the previous quarter. The slowdown was driven by weak government spending, a string of typhoons, and a corruption scandal that stalled infrastructure projects. Still, resilient household consumption helped keep the economy afloat. Typhoons caused significant damage, estimated at 21 billion pesos in losses to agriculture and infrastructure, further weighing on GDP. Despite these challenges, private spending remained a bright spot, supported by interest rate cuts from the central bank that helped sustain domestic demand. Economists expect a stronger finish to the year, with full-year growth forecast at around 5.6%, still within the government's target range. With government spending running 141 billion pesos below target last quarter, infrastructure is no longer the growth engine it used to be. The slowdown, fueled by corruption investigations, a weak peso, and falling investor confidence, is now testing the government's ability to keep the economy on track. Joining us now is Dr. John Paulo Rivera, Senior Research Fellow at the Philippine Institute for Development Studies. JP, thanks for being here with us.
Yes, good morning, Mike, and good morning to all the viewers.
Okay, JP, I want to jump off this Bloomberg article. They cited the Philippines as the worst performing stock market. We're down 20% over the last decade. Just to put things into context, out of a gauge of Asia Pacific stocks, that's up 72%. And in contrast, again, Jakarta's composite up 82%, again, against our negative 20%. I want to get your opinion on this, JP. Foreign investors don't seem to be paying attention to us anymore. How marginal have we become?
Well, the changes in the stock market right now, knowing how the Philippine stock market behaves, being speculative and highly explained by policy certainties, the recent scandals, the recent issues, despite strong macroeconomic fundamentals, are actually driving away foreign investors, lessening their appetite towards the Philippines until we have a better and a more stable policy relative to our neighboring economies.
Yeah, it's all about, strong economic fundamentals aren't going to cut it. We need strong policy. JP, GDP print, our print for Q3 is going to come out this Thursday. How much of a slowdown can we expect given the 141 billion peso spending shortfall in that same quarter? Do you think growth is going to slip below 5% for the period?
Well, the government underspending amounting to 141 billion, with that we can certainly expect a slowdown in growth for the third quarter, possibly within 5%. That's a big gap because public spending, based on statistics, is one of the main drivers of the Philippine economy. The private sector, you've mentioned that earlier, through consumption, tourism, remittances, while they can help, but it cannot fully make up for that underspending in government spending by that amount. But if the growth dips, really dips, it actually signals that the government would need to improve spending and project execution to bring that confidence back to the Philippine economy.
Yeah, it's all about bringing that confidence back. The government spending, that accounts for about 20% of GDP that cannot be replaced by consumer and private spending alone. JP, given everything that we've seen thus far, do you think Malacanang has a handle on the pervasive corruption and on our economic situation?
Well, in terms of handling the economy, there's always a dual role by the fiscal sector and the monetary sector. Our monetary sector is doing its best to manage economy, ensure price stability, and the fiscal sector's role is now to boost spending on productive activities, get a hold of penalizing these corrupt officials who have done damages to the economy, finally resolve the issues of corruption so that we can boost again, return that investor confidence that has been eroded for the past 5 months that this drama has been unfolding.
Yeah. JP, officials at the DOF, they say that this pause in spending is part of the cleanup, short-term pain for long-term gain. But how long can this kind of fiscal restraint, these cuts in government spending, continue before it starts to really, we've already started to see it before it really starts to negatively, in a big way, impact GDP?
Well, I always mention this, that the Philippine economy or any economy will not wait for the economic agents, politicians, economic leaders, policymakers to get their act together. The sooner we solve these corruption issues, the sooner will investor confidence go back. So we need not waste time. We have to act proactively, so that the issues can be solved and finally we can get back on track with the trajectory of our economy towards Ambition 2040 and the upper middle income class or country status.
Yeah, we've got bold ambitions to reach that upper middle income class. But until we get a handle, how would you describe Malacanang's, where they are right now in terms of addressing the pervasive corruption in the country? Where does Malacanang stand on that grade?
Well, they are now on a very tight and very challenging balancing act of looking after the economy and also running after those who needs to be penalized for the corruption. It's a tough call. It is a tough call, and the issues would have to be solved. The economy will follow soon. As I have been mentioning, political risks generate economic risk. And until Malacanang arrest the political risk due to the corruption, then economic risk would always be there.
Yeah, all right. Gotta get a handle on that political risk situation. JP, thank you so much for your time this morning.
Yeah, thank you.
Philippine manufacturing is showing early signs of life after months of sluggish activity. The Philippine manufacturing sector returned to expansion in October. The Purchasing Managers Index rose 50.1, up from 49.9 in September, signaling a slight improvement in business activity. S&P Global's Mariam Aluch described the outlook as mixed, while Jingyu Pan said that the decline in output is now barely noticeable. Production and new orders continued to fall, but at a slower pace. The drop was blamed on bad weather, product end-of-life cycles, and weak foreign demand, particularly after the United States imposed a 19% tariff on Philippine exports. Despite these headwinds, manufacturers remain optimistic about stronger demand and output in the year ahead, though analysts warn that global trade tensions and domestic political risks could still weigh on the recovery. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to the bottom line. Welcome back. Let's check on how Asian markets are doing this Tuesday morning. Right now, the Nikkei 225 is in the green, higher by 0.2%. Hong Kong's Hang Seng Index up by as much, up by 0.2%. And Shanghai's Composite in the red, down by 0.1%. And Singapore's Straits Times Index in the red as well, lower by 0.2%. Here at home, yesterday, Philippine stocks suffered one of their biggest sell-offs this year as investors' patience wears dangerously thin. The benchmark stock exchange index slid to a 7-month low Monday as investors braced for weak third-quarter economic data and continued to fret over government underspending. The PSEi index fell as much as 2.4% intraday to 57.61 before closing at 58.28, down 1.7%. Losses for the year now stand at almost 11% and nearly 20% over the past 12 months. Now, corruption probes and project delays are keeping public spending below target. Investors are now de-risking ahead of key data releases. Right now, okay, let's take a look at the main gauge this morning. As of 10:15, the main gauge is in the green, so we're seeing some buying after the sell-off yesterday. Market is up by 1.3% to 59.03. All shares index up as well, up by 0.8% to 35.79. Taking a look at the sub-indices, all are trading to the upside, with the financials and property counters up the most, up by 2.3% and up by 2.1% respectively. Trading volume thin at 63 million shares, valued at 1.2 billion pesos. Market breadth is bullish, with 78 advancers, 37 decliners, and 40 stocks unchanged. Taking a look at the currencies, the peso opens at 58.70 against the greenback, up from its previous close of 58.79. Corruption probes and weak public spending continue to weigh on investor confidence. Philippine stocks remain under pressure while the peso stays weak. Investors are now looking ahead to Thursday's third-quarter GDP data, expected to show growth easing to around 5% or lower. Joining us is Jonas Ravelas, Senior Advisor at Reyes Takandong. Hi, Jonas. Thanks for being here with us.
Good morning, Maiki.
Jonas, I want to jump off an article on Bloomberg. Unfortunately, we're being called the world's worst performing stock market. Over the past decade, we've lost 20%. In contrast, a gauge of Asia-Pacific stocks is up 72%. Specifically, Indonesia's Jakarta Composite higher by 82%. What does this tell you about where we stand now?
Oh, well, basically, we're heavily battered. So I guess from what we're seeing right now in the stock market, there's bargain hunting. But basically, we're really having a series of unfortunate events. So this is basically one driven by tariff uncertainty at the start of the year, followed by spending slowdown due to inflation. Then you have this issue of the corruption scandal. and eventually would impact slower growth. So till the first half, we were doing quite well at around 5.5%, although it's still short of government 6%. Although right now the new target's between 5.5 to 6%. So it's really a challenge on the part of the Philippines to attract investors.
Yeah. That title, World's Worst Performing Stock Market, down over 20% over the last decade. How insignificant have we become to foreign investors, Jonas?
Well, basically, let's put it this way: we're not as insignificant. It's just that people are just shying away from the Philippines. Philippine fundamentals are strong enough. It's just that when you talk about corruption and all of these videos that we see about the infrastructure that are substandard, it's very difficult to attract investors to come to the country. So it's this corruption issue that's clouding investors at the moment.
Yeah, talking about yesterday's performance, we slid to the 5,700 level. Year to date, we're down 11%. When corruption, cuts in government spending, and weak growth are all over the headlines, is this exactly the kind of market reaction that you'd expect, what we saw yesterday?
Definitely. This is actually what uncertainty is all about, and markets hate uncertainty.
How much of the sell-off we saw yesterday was about loss in trust in the government, and how much of that was because investors are bracing for a weaker economy ahead?
Well, basically, I think what we saw yesterday was more of, again, a reaction to the possible impact of the corruption scandal. So people were probably expecting GDP numbers to still stay above 5%. Given that, initially, my point of view, I was looking at initially 5.7, mainly because there could be tailwinds from the second quarter election spending. So, given that there's an improvement in inflation and, consumer would most likely spend. But eventually, with this corruption, most likely we'll see the third quarter GDP growth at best maybe 5.2 to 5.3%.
Yeah, okay, that's lower than the government's target of about 5.5%. Jonas, as confidence slides and growth slows, do you think that Malacanang has a handle on this situation?
Well, I think they're trying to find or try to grip the issue, but again, they need to be able to create concrete steps to start getting the trust back. As I said, the road to redemption out of 5, we've only seen roughly 2, the SALN and the live streaming of the ICI investigations. So the other thing that we really need to see is that, somebody has to go to jail.
Yeah, you've said it before, big fish need to go to jail. This kind of visible accountability, do you think this is what would satisfy the market?
I think definitely it will, because this will already give a concrete proof that there is a proof of concept of how we want to address these corruption issues, whether it could be the Pharmaly, it could be the DPWH issued, DOH, and others. So the proof of concept and trying to jail these people will provide a deterrence to a lot of individuals. Right now, there's no deterrence at all.
Yeah, that's just part of the mix we need to really jumpstart this economy. At this junction, Jonas, 2 months before the end of the year, how would you describe our current economic environment, and what does the trajectory look like into 2026?
Well, basically, I guess there's still a lot of uncertainty, or there's a uncertainty overhang, and people are looking at something that is more sentiment rather than issues of spending and the economic slowdown, because we want to build the trust back. We need to get trust back into the government. So they need to work hard to start jailing these people so that people can start trusting government again. And, sooner or later, come up with a plan to ensure that all of the projects that the government, particularly DPWH, will be corruption free and will be at par with the international standards for infrastructure.
Yeah, we really need that. Government spending accounts for 20% of GDP. Jonas, this cannot be replaced by consumer spending and private consumption. Just how important is that 20% that the government puts into infrastructure to really grow the economy?
Well, basically, this is where we eventually see that, when we started this infrastructure story, we meant to envision that this would translate to agriculture, better tourism, and manufacturing, which never happened. And we need to be able to ensure that if we want our economy to grow, we need to come up with this infrastructure. Now, we need to add the word climate resilient because given the calamities that we went through, we need to have infrastructure that will withstand this type of calamities. No? So that will mean a higher cost, and we want to make sure that government and whoever is going to be doing it needs a lot of study to ensure that this will be dependable infrastructure so that we're able to attract investors. At the same time, the public is comfortable in using these infrastructures.
Yeah, okay, Jonas, that's all the time we have for now. Thank you so much for being here with us. That was Jonas Ravela, Senior Advisor at Reyes Takano. As investors worry about weak growth, one bank is delivering big results. Metrobank just posted record earnings. MBT and Trust Company, or Metrobank, posted record net earnings of 37.3 billion pesos in the first 9 months of the year. In its disclosure, the bank said pre-provision operating profit rose 12.1% year-on-year to 59.2 billion pesos. Metrobank said its strong net earnings were driven by solid loan growth, improving margins, healthy trading income, and well-managed cost growth. And in other corporate news, Philinvest REIT Corporation, or Philinvest REIT, receives a silver award in the Environment Renewable Energy category at the inaugural Inquirer ESG Edge Impact Awards 2025. The event, organized by the Inquirer Group of Companies, honors publicly listed firms leading in sustainability and social responsibility. Philinvest REIT, led by President and CEO Maricel Bilyonaryo, is the only REIT company recognized at that ceremony. Bilyonaryo says that the award validates Philinvest REIT's commitment to sustainable operations and responsible business practices. Now, Maharlika Investment Corporation CEO Rafael Consing issues a statement on calls for the fund to help stabilize the Philippine stock market. Consing asserts the MIC is guided by a dual mandate, and that is to generate optimal long-term financial returns and contribute to the nation's long-term development. He adds that their role is not short-term market stabilization, and that their investment decisions are driven by a strategy that prioritizes sustainable growth and prudent risk management. Philippine Chamber of Commerce and Industry Vice President Brian Ang says that the MIC should deploy some of its cash to stimulate the stock market. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.